Hi, welcome guys. In this video, we're going to break down Japanese candlestick charts for Forex trading in a way that's super simple and easy to follow, even if you're just starting out. First, let's start with what a candlestick represents. We're looking at a one-day chart of Euro USD here. Each candlestick captures an entire day of price activity, the opening price, the closing price, the highest price, and the lowest price for the day. Now, if we switch to a 1-hour chart, the candlesticks change. Each candlestick now represents just 1 hour of price movement. So a single candlestick reflects the time frame you choose, whether it's daily, hourly, weekly, or any other time frame. Okay, now we know that a candlestick represents the price action for the selected time period. Let's break down the candle's components. Let's start with the green candlestick, also known as a bullish candle. This type of candlestick tells us that the price closed higher than it opened. Now, let's take a closer look at the green candle we have here. The open price is located at the bottom of the body, and the close price is at the top of the body. Next, notice the thin lines extending above and below the body. These are called wicks, or sometimes shadows. Here's what the wicks tell us. The top wick shows the highest price the market reached. The bottom wick shows the lowest price the market dipped to. Now let's interpret the body of the candlestick. A large green body indicates strong buying momentum with a significant price increase. A small green body that suggests only a slight price increase, meaning weaker momentum. Now we know what green candle represents. Let's take a look at red candlestick, also known as a bearish candle. This type of candlestick tells us that the price closed lower than it opened. Now let's take a closer look at the red candle we have here. The open price is located at the top of the body, and the close price is at the bottom of the body. Next, notice the thin lines extending above and below the body. These are called wicks, or sometimes shadows. Here's what the wicks tell us. The top wick shows the highest price the market reached. The bottom wick shows the lowest price the market dipped to. Now let's interpret the body of the candlestick. A large red body indicates strong selling momentum with a significant price decrease. A small red body that suggests only a slight price decrease, meaning weaker momentum. We now know the basics of bullish and bearish candles, but what if the price opens and closes at the same price? This is where we have an indecision candle, often called a doji. A doji forms when the opening and closing prices are very close to each other. It signals uncertainty or indecision in the market because neither buyers nor sellers gain control. Now that we know how to read candlesticks, let's move on to trends. Uptrend. In an uptrend, price goes up. In an uptrend, price does not simply go up in straight line. It consists of higher highs, meaning each peak is higher than the last, and higher lows, meaning each dip is higher than the previous one. Now that we've covered uptrends, let's move to the opposite, downtrends. In a downtrend, the price moves lower, forming lower highs and lower lows. In general, you'll also notice more red candlesticks in a downtrend compared to an uptrend. Let's take a look at one more market behavior, sideways movement. In a sideways market, the price doesn't move significantly up or down. In a sideways trend, you'll see a mix of green and red candlesticks forming equal highs and equal lows. This shows that the price is moving within a range but isn't trending in any particular direction. Alright folks, now that we've covered how to read candlesticks and how they form trends, remember, practice is key. Keep studying, and soon you'll be reading candlestick patterns like a pro. Thanks for watching. Don't forget to like, share, and subscribe for more lessons. See you in the next one.